Trump blocks Strait of Hormuz, triggers global oil crisis, markets panic. The world held its breath this morning. In a move that has sent shockwaves across global markets and triggered immediate fears of a wider geopolitical crisis, former U.S. President Donald Trump has reportedly ordered actions that effectively block access through the Strait of Hormuz, one of the most strategically vital oil choke points on Earth. Within minutes, energy markets reacted. Oil prices surged sharply, shipping routes were thrown into uncertainty, and governments across Europe, Asia, and the Middle East scrambled to assess the implications of what could become the most disruptive energy crisis in modern history. The Strait of Hormuz is not just another waterway. It is the narrow maritime corridor through which nearly one-fifth of the world's oil supply flows every single day. Any disruption here is not regional, it is global. And now, for the first time in years, that flow is under direct threat. Early reports indicate that naval deployments and strategic positioning in the Persian Gulf have created a de facto blockade scenario. Tankers are hesitating, insurance costs are skyrocketing, and major oil-importing nations are already preparing emergency responses. What makes this moment even more volatile is the lack of clarity. Is this a temporary show of force? A calculated economic maneuver? Or the opening move in a much larger confrontation? Because history has shown that the Strait of Hormuz is not just an economic lifeline, it is also a geopolitical pressure point, where even minor escalations can spiral into global crises. Markets are not waiting for answers. Stock exchanges from New York to Tokyo have already shown signs of instability. Energy-dependent economies are bracing for inflation shocks, and behind closed doors, policymakers are now confronting a scenario many had hoped would never materialize. A sudden, high-stakes disruption of global oil supply. The consequences could extend far beyond fuel prices. This could reshape alliances, test military deterrence, and force nations into rapid, high-risk decisions. But to understand how the world arrived at this moment, and why this single move carries such enormous consequences, we need to step back. Because this story did not begin today. It has been building for years, through rising tensions, strategic miscalculations, and a fragile balance of power centered around one narrow stretch of water. And what happens next may depend entirely on how that history unfolds in the hours and days ahead. If you want clear, fact-based analysis of global events as they develop, not speculation, not noise, make sure to subscribe. Because this situation is evolving rapidly, and every new development could shift the balance even further. The question now is no longer whether this matters. The question is how far it goes. To understand how the world reached this moment, we need to go back decades, to a region where geography, energy, and power have always been tightly intertwined. The Strait of Hormuz has long been one of the most strategically sensitive locations on the planet. Sitting between Iran and Oman, this narrow passage connects the Persian Gulf to global markets. For decades, it has functioned as the primary artery for oil exports from Saudi Arabia, Iraq, Kuwait, the UAE, and Iran itself. But it has never been a neutral space. Tensions here date back to the late 20th century, particularly during the Iran-Iraq War of the 1980s. In what became known as the Tanker War, both sides targeted oil shipments, drawing in global powers and forcing the United States to deploy naval forces to protect commercial shipping. Even then, the message was clear. Control of this waterway meant leverage over the global economy. Fast forward to the early 2000s. Following the U.S. invasion of Iraq in 2003, regional instability intensified. Iran expanded its influence across Iraq, Syria, and Lebanon, while simultaneously investing heavily in asymmetric naval capabilities, fast attack boats, mines, and missile systems designed specifically to threaten traffic through the Strait of Hormuz. By the 2010s, this tension had become cyclical. Every few years, a new crisis would emerge. 2011-2012, Iran threatens to close the strait in response to Western sanctions. 2018, the United States withdraws from the Iran nuclear deal, triggering renewed economic pressure on Tehran. 2019, oil tankers are attacked near the strait, raising fears of covert escalation. 2020, the killing of Iranian General Qasem Soleimani brings the region to the brink of open conflict. Each incident reinforced a dangerous reality. the Strait of Hormuz was no longer just a shipping route. It was a geopolitical pressure valve. At the same time, global dependence on this corridor remained high. Despite efforts to diversify energy routes, pipelines and alternative shipping paths have never fully replaced the capacity of the strait. Countries like China, India, Japan, and much of Europe remain deeply reliant on Gulf and NIFT flowing through this single choke point. Meanwhile, U.S. policy toward the region has fluctuated, at times focused on military deterrence, at other times shifting toward strategic disengagement. This inconsistency has created openings for regional actors to test boundaries and for global competitors like Russia and China to expand their influence. Against this backdrop, Donald Trump's political approach to the Middle East has been defined by unpredictability. During his presidency, he pursued a maximum pressure campaign against Iran, combining economic sanctions with military signaling. While he avoided large-scale war, his administration repeatedly brought the region close to escalation through aggressive rhetoric and high-risk decisions. Now, with this latest move affecting the Strait of Hormuz, those past dynamics are colliding with present-day realities, a region already under strain, a global economy still vulnerable to energy shocks, and a geopolitical environment where miscalculation carries unprecedented consequences. Because this is not just about one decision. It is the culmination of years of rising tension, unresolved conflict, and strategic competition centered around one of the most critical waterways on Earth. And as history has shown, when pressure builds in the Strait of Hormuz, it rarely stays contained for long. What exactly happened in the Strait of Hormuz, and how did a strategic waterway become the center of a global crisis in a matter of hours? According to early reports, the sequence began with a sudden escalation in U.S. naval positioning in the Persian Gulf. Multiple assets were moved into proximity of the Strait of Hormuz, including guided missile destroyers and surveillance aircraft. Within a narrow window of time, commercial shipping traffic began to slow. Then came the disruption. Several oil tankers reportedly altered course or halted movement entirely after receiving advisories about heightened military activity in the area. Maritime tracking systems showed unusual congestion patterns forming just outside the strait, while insurance alerts classified the region as high risk almost instantly. From a functional standpoint, this created what analysts describe as a de facto blockade. No formal declaration, no official closure, but enough military presence and uncertainty to stop the flow. The Trump camp, however, presents a very different narrative. According to statements aligned with his position, this is not a blockade, but a strategic enforcement measure. The justification centers on protecting U.S. interests and countering perceived threats in the region. Supporters argue that the move is designed to reassert control over a volatile corridor and send a clear deterrent signal to adversaries, particularly Iran. In this version of events, the disruption is intentional, but controlled. A show of force, not an act of war. But Iran and several regional observers strongly dispute that characterization. From their perspective, this is an aggressive escalation, one that directly threatens international shipping and violates long-standing norms governing freedom of navigation. Iranian-linked sources claim that the presence of U.S. naval forces has effectively militarized the strait, forcing commercial vessels into a state of uncertainty and risk. Some reports even suggest that Iranian patrol units have increased their own activity in response, raising the possibility of close encounters between opposing forces. And this is where the situation becomes even more complex, because the available evidence remains incomplete. Satellite imagery confirms increased naval deployments. Shipping data shows real-time disruption. Energy markets reflect immediate panic. But there is no single, universally accepted account of intent. Was this pre-planned? Was it reactive? Or was it triggered by intelligence that has not yet been made public? Adding to the uncertainty are conflicting intelligence signals. Some analysts point to prior warnings about potential threats in the region, suggesting that this move may have been preemptive. Others argue that the scale and speed of the disruption indicate a calculated geopolitical maneuver aimed at economic leverage rather than immediate security concerns. Meanwhile, global shipping companies are making decisions in real time. Some are rerouting, others are waiting, all are calculating risk. And in a system where even minor delays can ripple across global supply chains, the impact is already being felt far beyond the Gulf. What we are seeing is not just an isolated incident. It is a rapidly evolving situation with multiple narratives, incomplete information, and high stakes consequences, unfolding in one of the most sensitive regions on Earth. And until clarity emerges, uncertainty itself may be the most powerful force shaping what happens next. To understand why this moment carries such extraordinary weight, you have to look beyond the headlines and focus on the strategic reality of the Strait of Hormuz itself. This is not just a narrow waterway, it is the central artery of the global energy system. At its narrowest point, the strait is only about 21 miles wide, with designated shipping lanes in each direction just a few miles across. Yet through this constrained corridor passes nearly 20% of the world's daily oil consumption. Every tanker that moves through it represents not just cargo, but continuity for the global economy. And that makes it one of the most vulnerable choke points on Earth. From a military standpoint, the geography is unforgiving. Any force that can project power into this space, through naval presence, missile systems, or even asymmetric tactics like mines and fast attack craft, can disrupt or control the flow of energy at a global scale. This is why both the United States and Iran have, for years, treated the strait as a focal point of strategic planning. The United States maintains a significant naval presence in the region precisely for this reason. Its objective has traditionally been clear: ensure freedom of navigation and prevent any single actor from dominating the passage. Carrier strike groups, surveillance systems, and regional bases all feed into this mission. But that balance depends on predictability. And what we are seeing now challenges that foundation. If a U.S.-aligned action is effectively restricting access, whether intentionally or as a byproduct of military positioning, it alters the strategic equation in a profound way, because it signals that the very force responsible for keeping the strait open may now be contributing to its disruption. That shift has immediate operational implications. For oil-producing nations in the Gulf, it creates uncertainty about export reliability. For energy-importing countries, it introduces supply risk at scale. For global markets, it injects volatility into pricing mechanisms that depend on steady flow. But the implications go even deeper. Control, or disruption, of the Strait of Hormuz is not just about a NIFT. It is about leverage. Any actor that can influence this choke point gains indirect influence over global inflation, industrial output, and even political stability in distant regions. Energy prices affect transportation, manufacturing, food supply chains, virtually every sector of modern economies. And that means this is not just a regional flashpoint, it is a strategic pressure point with worldwide reach. There is also the question of escalation dynamics. With both US and Iranian forces operating in close proximity, the margin for error becomes dangerously thin. A single miscalculation, a misinterpreted maneuver, an accidental encounter, could trigger a chain reaction that neither side initially intended. History has shown how quickly such scenarios can unfold. And in a confined space like the Strait of Hormuz, there is little room to de-escalate once tensions cross a certain threshold. What makes the current situation especially significant is that it combines three critical elements: a vital global choke point, a high concentration of military assets, and a sudden disruption with unclear boundaries. That combination does not just shift the strategic picture, it destabilizes it. Because when control of a system this critical becomes uncertain, the consequences are not gradual. They are immediate, they are global, and they are extremely difficult to contain. As the situation unfolds, intelligence agencies and geopolitical analysts are working rapidly to interpret what this disruption in the Strait of Hormuz actually means, and more importantly, what it could become. Early intelligence assessments point to a highly coordinated shift in regional posture. According to defense analysts, the scale and speed of naval repositioning suggests that this was not an improvised move. Instead, it appears to have been planned with specific operational objectives in mind. Whether those objectives were deterrence, signaling, or economic leverage remains the subject of debate. What is clear, however, is that the impact was anticipated. Energy analysts at major international institutions note that even a temporary disruption in the strait can trigger disproportionate market reactions. Because global oil supply chains operate on tight margins, uncertainty alone, without a single barrel being physically blocked, can send prices sharply higher. And that is exactly what has happened. From an intelligence standpoint, one of the key questions is intent. Was this designed to pressure a specific country? To force negotiations? Or to test how markets and governments would respond under stress? Some analysts believe this could be part of a broader strategic doctrine, one that uses controlled disruption to achieve geopolitical goals without crossing into direct military conflict. In this framework, the objective is not war, it is leverage. Military experts have also raised concerns about escalation risk. With US and Iranian forces operating in close quarters, the probability of unintended incidents increases significantly. Naval strategists point out that in confined waterways like the Strait of Hormuz, even routine maneuvers can be misinterpreted as hostile actions. And when both sides are on heightened alert, reaction times shrink. That creates what intelligence professionals often refer to as a compression of decision space, a scenario in which leaders have less time to assess, verify, and respond before events escalate. Think tanks focused on global security are already modeling potential outcomes. Some projections suggest that if the disruption continues for even a few days, global oil inventories could begin to tighten rapidly. Within weeks, this could translate into sustained price increases, supply chain disruptions, and inflationary pressure across multiple economies. Other analysts are looking beyond energy. They warn that this event could reshape geopolitical alignments. Countries heavily dependent on Gulf oil, such as China and India, may be forced to reassess their strategic positioning. Meanwhile, European nations could face renewed energy insecurity at a time when stability is already fragile. There is also a growing focus on credibility. Experts argue that actions affecting a critical global choke point inevitably carry reputational consequences. Allies may question predictability, adversaries may test boundaries, and neutral actors may begin hedging their positions in response to perceived instability. Perhaps most importantly, intelligence assessments emphasize uncertainty. Despite advanced surveillance, real-time data, and global monitoring systems, there is still no definitive clarity on how long this situation will last, or how far it might escalate. And in geopolitical crises, uncertainty is not just a byproduct, it is a force multiplier. Because when decision-makers operate without clear information, they tend to prepare for worst-case scenarios, and that preparation alone can drive events forward, sometimes faster than anyone intended. But the other side has a point. Not all analysts agree that the situation in the Strait of Hormuz represents a deliberate blockade or a coordinated attempt to disrupt global oil flows. In fact, several diplomatic and policy experts argue that the current interpretation may be overstating intent while underestimating complexity. From this perspective, what is unfolding is not a blockade, but a security escalation response in a highly volatile maritime environment. Supporters of this interpretation argue that increased naval presence in the region is not new. The United States and its allies have maintained operational deployments in the Persian Gulf for decades, primarily aimed at ensuring maritime security and deterring sabotage against commercial shipping. In this reading, what appears to be disruption may instead be the unintended consequence of heightened alert levels. When military readiness increases, shipping behavior often changes immediately. Insurance premiums rise, commercial operators slow movement, and risk-averse decisions by private companies can create the appearance of a physical obstruction, even when no formal restriction exists. Diplomatic sources also suggest that the narrative of a blockade may be emerging faster than verified facts can confirm it. In fast-moving geopolitical events, perception often outpaces reality. Another alternative interpretation centers on signaling rather than execution. Some policy analysts believe this could be a form of strategic messaging, intended to communicate resolve to adversaries without crossing the threshold into open conflict. In this framework, military positioning is used as a tool of deterrence, not disruption. The goal, according to this view, is to influence behavior through pressure, rather than to physically control the Strait of Hormuz. There are also questions about timing. Critics of the escalation narrative point out that global energy markets are already highly sensitive due to broader economic uncertainty. Even small disruptions in communication, shipping advisories, or risk assessments can trigger outsized reactions in oil prices. In other words, markets may be reacting to fear, not to a confirmed physical blockade. Some regional diplomats also warn against premature conclusions. They emphasize that the Strait of Hormuz has seen dozens of heightened alert situations over the past decades that did not escalate into sustained closures or military conflict. In many cases, Tensions de-escalated once communication channels were clarified or diplomatic signals were exchanged. From this perspective, the current crisis may still be reversible. However, even those presenting alternative interpretations acknowledge one critical reality: the system is fragile. Whether or not a formal blockade exists, the combination of military activity, political tension, and market sensitivity creates a highly unstable environment. And in such environments, misunderstandings can become just as dangerous as deliberate actions. Because once narratives take hold, once markets, governments, and militaries begin responding to perceived escalation, it becomes increasingly difficult to reverse momentum. So while one interpretation sees a calculated geopolitical move, the other sees a misread escalation amplified by uncertainty and fear. Both cannot be fully proven at this stage, and that ambiguity is exactly what makes the situation so volatile. At this stage, the implications of the Strait of Hormuz disruption extend far beyond military positioning or diplomatic signaling. They are now economic, systemic, and deeply global. The first and most immediate impact is energy pricing. Even a partial slowdown in oil shipments through the Strait of Hormuz creates upward pressure on global crude benchmarks. Markets react not only to actual supply changes, but to risk premiums, costs added simply because future supply becomes uncertain. If this disruption continues, oil importing economies will feel it quickly. Transportation costs rise first. Then industrial production becomes more expensive. And finally, consumer prices begin to reflect the shock. For everyday households, this translates into higher fuel costs, increased food prices, and broader inflationary pressure. Because modern supply chains are tightly connected to energy, even small disruptions at major choke points ripple outward across entire economies. But the consequences do not stop at economics. Militarily, the situation forces a rapid recalibration of posture across multiple regions. Naval deployments may increase not only in the Persian Gulf, but also in surrounding waters as nations attempt to secure shipping routes and reassure markets. This creates a broader pattern of global military alertness, even among countries not directly involved in the dispute. At the geopolitical level, the impact is even more complex. China, which relies heavily on Middle Eastern oil imports, is watching closely. Any sustained disruption could push Beijing to diversify supply routes or deepen strategic partnerships with alternative energy suppliers. India faces similar concerns, given its growing energy demand and dependence on imported crude. European nations, still sensitive to energy instability following previous global crises, face renewed vulnerability. Energy security once again becomes a central political issue, with potential consequences for inflation control and domestic policy. Meanwhile, the United States finds itself balancing multiple pressures at once: strategic deterrence in the region, market stability at home, and diplomatic management with allies and rivals. And all of this unfolds while global markets remain extremely sensitive to uncertainty. For viewers watching this unfold, the impact is not abstract. It connects directly to daily life: fuel prices at the pump, heating and electricity costs, transportation expenses, and even the cost of basic goods. Because when oil markets move sharply, no economy remains untouched. There is also a psychological dimension. Events like this increase global risk perception. Investors become more cautious, governments become more defensive, and institutions begin preparing for scenarios that, only days earlier, seemed unlikely. That shift in expectations can sometimes matter as much as the event itself. Because in global systems, perception drives behavior, and behavior drives outcomes. So even before any long-term resolution is reached, the world is already adjusting, pricing in risk, reallocating resources, and preparing for multiple possible futures. The Strait of Hormuz is no longer just a regional concern. It has become a global stress point. And what happens next will determine whether this remains a temporary shock or evolves into a prolonged period of instability affecting economies around the world. The coming hours and days will determine whether this crisis stabilizes or accelerates into a broader geopolitical confrontation. Several key developments are now being closely watched by intelligence agencies and global markets. First, diplomatic activity. Behind the scenes, emergency consultations are expected among Gulf states, Western allies, and energy importing powers. Any coordinated diplomatic response could help clarify intent and reduce uncertainty in shipping lanes. At the same time, back-channel communications may already be underway to prevent further escalation in the Strait of Hormuz. Second, military posture. Naval forces in the region remain on heightened alert. Any additional movement, whether reinforcement or repositioning, will be closely interpreted as either escalation or de-escalation. In such a compressed environment, even routine maneuvers carry strategic meaning. Third, market stabilization efforts. Energy traders, shipping insurers, and global financial institutions are actively recalculating risk exposure. Central banks and economic policymakers are also monitoring inflationary pressure indicators tied to potential oil price volatility. What is confirmed at this stage is limited but significant. There has been a measurable disruption in shipping activity in and around the Strait of Hormuz. Military presence in the region has increased, and global markets have responded with immediate volatility. What remains uncertain is equally important: whether this constitutes an intentional blockade or a temporary security posture, whether escalation will continue or reverse, and whether diplomatic channels can contain the situation before it expands further. Two primary scenarios are now emerging. In the first scenario, de-escalation, diplomatic intervention stabilizes the situation. Shipping resumes normal flow. Military activity returns to baseline levels, and markets gradually correct after the initial shock. In the second scenario, prolonged escalation, the disruption continues or intensifies. Energy markets remain unstable. Regional military tensions increase, and global economies begin to experience sustained inflationary and supply chain pressure. Neither outcome is guaranteed, and the difference between them may depend on decisions made within a very short window of time. What makes this moment particularly critical is not just the scale of the Strait of Hormuz, but the speed at which modern systems react. Information travels instantly, markets respond within seconds, and military postures adjust in real time. That means the margin for error is extremely small. As this situation continues to develop, one fact remains clear. The Strait of Hormuz is once again at the center of global attention, and whatever happens next will not remain confined to one region. It will echo across energy markets, political alliances, and economies worldwide. For now, the world is watching closely, waiting for the next signal, waiting for the next move, and waiting to see whether this becomes another contained crisis or the beginning of something far larger. If you want continued updates and deep geopolitical analysis as this story develops, make sure to subscribe. Because in moments like this, understanding what happens next is everything.